Yes, I think the story in the Financial Times was from Invesco, and I think they were saying that the UK was a particularly attractive place for private equity, mainly because of things like tax. I mean, it is true that some people have left London for places like Singapore and Hong Kong, but the bulk of the industry has not. The bulk of the industry has stayed. So I think the government should think very carefully about making any further tax changes that might hit things like carried interest. I think that was the particular concern expressed in the article. But the other thing that I think we need to be very conscious of is the new regulatory regime to which private equity fund managers are going to be subject, and that is something I think the full impact of which has not yet fully been appreciated.
So tell us some more about these regulations. How did they come about and what are they intended to do?
Well, the most relevant ones are called AIFM, which stands for Alternative Investment Fund Managers, and we have actually talked about them on CAS Talks before. But briefly, they will impose a much higher level of compliance and reporting on private equity fund managers, together with many other different types of fund managers. And I think the big problem is that obviously the large fund managers, what we call the GPs, the mega buyout funds, will be impacted relatively little because they have very high budgets, very high overheads, they have very high management fee to match those. I think it will place a disproportionate burden on the smaller private equity fund managers, the sort of people who do mid-market transactions. And of course, originally this was even going to bite on the very smallest of venture capital funds, I think largely because the European regulators don't seem to understand what a private equity fund is, and in particular they seem to get very confused between those and hedge funds.